Welcome back. We're going to talk about benefit number one. So, the first benefit is going to be asset protection. One of the primary reasons to establish a structure is to protect your personal assets from your business liabilities. Real estate investments can be inherently risky. So, things like lawsuits, property damage, tenant disputes can really affect you. By using limited liability companies or trusts or corporations or holding companies, you can create a legal barrier, and this will shield your personal assets such as your home, your savings, your boats, your cars, your other real estate investments from being targeted in the event that you have a legal claim against your real estate investments as a whole. So the next benefit that I want to talk to you about is going to be benefit number two, and that's going to be tax efficiency. So the right structures can provide significant tax advantages for real estate investors. Each structure has its own tax implication and benefit. So you definitely want to talk to a CPA, a tax planner, a tax strategist. But for example, an LLC allows for pass-through taxation and the profits and losses from the business to flow through to an individual's personal tax return, whereas a corporation may offer certain deductions and other opportunities for tax planning. Consulting with a professional is going to be exactly what you want to do first, though, because that way you can learn how to optimize your strategy and minimize your overall tax burden based on your individual situation and earning capacity. So just make sure you do that. So benefit number three is going to be financing and credibility. So establishing formal structures can enhance your credibility in the eyes of like a lender or partners or stakeholders or other investors. And so when you're dealing with mid, small, or even large scale real estate investments, financing can be really crucial. So having your structures well thought out demonstrates professionalism, financial stability, and it makes it easier for you to negotiate favorable terms and secure financing, and also potentially attract other investors or partners. So, as we're talking about this is private money, I know for most of my investors, some sort of legal structure is a requirement in order to get the financing. So, benefit number four, succession planning and estate management. A well thought out structure can allow you to have an effective succession plan and help you manage your estate more effectively. So when you're looking at building long-term wealth and leaving a legacy, it's important to consider like the future transfer of the assets and ownership. Establishing things like trust and holding companies also provide instructions that can provide a clear framework for managing these assets in case something happened, good, bad, or indifferent. And it's a smoother transaction for your heirs or your designated beneficiaries and can minimize estate tax and other complexity. I know for my grandmother, she ended up leaving millions of dollars to all her children, and there was no argument because it was all done through a trust. And so it was already established. It is what it is. So, benefit number five, scalability and portfolio diversification. When you're operating as an investor, it also involves managing portfolios sometimes or multiple properties. And these structures provide you with the flexibility to scale, to grow, to manage the portfolio. By segregating the assets, liabilities, it can also streamline the forming of other entities, your taxes. There's so many things that you can use these for to compartmentalize your risk. You can also help you to streamline efficiency when it comes to operations, along with your other strategies. Overall, we just really wanted you to remember these tips and just highlight the importance. So, as we start to talk about them a little bit further, we will have other people who are professionals in this area to be able to give you proper advice. This is just a high level overview of the importance itself. And we do encourage everyone to talk to the professionals, your personal financial planners, your CPAs, your tax strategists. We want you to seek the professional help to make sure that you can take these concepts that we're giving you and then put them in proper context for you and your family, so that you don't just acquire properties, you don't just keep properties, but you have them structured properly so that in the event of transfer, that you can do that with as little complication as possible. Alrighty now. Thanks for watching. We'll see you in the next lesson.